So you have to see this as a twofold story. We have the provisions linked to our business in Russia onshore, which, as we complete the sale, is going to basically go away together with the assets. And then we have the offshore exposure, where we have roughly 2.8 billion in terms of our global banking, investment banking business there. And here it's a lot of ECA-backed, structured credit, secured exposure, where we believe we have less than 1 billion of really at-risk exposure, and so largely manageable. And so far, with very little actual defaults or actual issues, but we are prudent in provisioning this exposure.
About the ramifications of rising interest rates globally, though, we just had that 50 basis point move from the Fed. How much of it actually arrives at your bank?
Well, it's obviously a fundamental piece of news for the macroeconomic context, right? And the triggered inflation feedback loop between the energy shock, what was already going on before the war in Ukraine. You have the inflation expectation rising, and the risk of a final fundamental impact on the macroeconomy into a recession that is, going to impact potentially the entire system and us as well. But short term, it's not having a strong impact. As you can see, we have a very strong set of results across all our businesses, be it investment banking, mobility, or retail banking in France.
Slawomir, there's a problem here, and thank you very much indeed for joining us. It's great to chat to you. Why on earth is the market then, given what you've just said about underlying strength rather than the one-off factors as well, why is the market valuing you with along the worst of the banks in Europe? 0.33 price to book is up there with the ones that everyone's worried about. What's going on there, sir?
So you have a historical overhang for a number of reasons, and we were, as you know, in a very strong rebound throughout 2021 with a very consistent delivery across all our strategic roadmaps and very strong results indeed. It's again the case in Q1, but you have today for the European banking sector an overhang linked to the overall situation, both in terms of the conflict in Ukraine, but also in terms of the macroeconomic overhang. So you have a discount linked to the sector. And in our particular case, we had a specific exposure to Russia, which we are exiting as one of the first significant companies exiting Russia. So over time, the delivery, consistent delivery of our roadmaps with consistent delivery of strong results, which we have been delivering to the market, and the removal of the Russia overhang should trigger the re-rating again.